Stocks kept cool even as inflation came in hot. Hello, today is Monday, June 14th. And in this week's market recap, stocks ended the week mixed as investors appeared to shrug off a hotter than expected inflation report. So that's what we're going to talk about here today. But before we do, just a reminder that the day after tomorrow on Wednesday, we have our next investment update and economic outlook event. We'll provide a performance update on our smart mix strategies, as well as a look to the future with a discussion on the positives in the market and the economy, potential headwinds, as well as a short-term and longer-term outlook. We'll be using Zoom for the event, and we'll be broadcasting it live on Facebook as well. So if you RSVP at our website and join us on the Zoom call, you'll get a reminder email ahead of time when we're starting, and then you'll also be able to ask any questions that you have during the Q&A session. So again, head on over to our website to RSVP for that event. So with that, I'm going to go ahead and roll the intro, and then we will go ahead and dive into this week's update.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
All right, stocks ended the week last week mixed as investors appeared to shrug off a hotter than expected inflation report. The Dow Jones Industrials Average slipped 0.80%, while the Standard & Poor's 500 advanced 0.41%. The NASDAQ Composite Index led, tacking on 1.85%, and the MSCI EAFE Index, which tracks developed overseas stock markets, rose 0.31%. The market traded in a narrow range for much of last week as investors anxiously awaited the release of the Consumer Price Index, or CPI, on Thursday. May's CPI saw an increase in inflation that exceeded most expectations. Paradoxically, markets advanced on the news, sending the S&P 500 to a new record close and the technology-heavy NASDAQ Composite higher. Perhaps equally unexpected was the decline in the 10-year Treasury yield, which slipped to 1.45%, touching its lowest level in 3 months. On Friday, stocks were unable to materially build on the previous day's advance, though the S&P 500 managed to add onto its record Thursday close. Consumer prices headed higher in May, rising 0.6% from April and by 5% from a year ago. It was the largest jump in the CPI since August of 2008. Core inflation, which excludes food and energy prices, rose 3.8%, the sharpest increase in nearly 3 decades. Automobile prices were one of the primary contributors to May's number. Used car and truck prices jumped 7.3% month over month, and by 29.7% from a year ago. New cars experienced their highest monthly increase since October of 2009 as a result of an inventory shortage stemming from tightness in the semiconductor supply. All right, remember, later on today, I will be emailing out our full weekly economic update. If you're not getting this and you would like it, you can go to our website and subscribe. In the update, you'll also find our financial tip of the week, companies reporting earnings, financial data that we're watching, plus a riddle for you and a quote as well.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.